A lot of conversations have been held on the approach of President Bola Tinubu in handling macroeconomic headwinds, which, though not peculiar to Nigeria, but requires customized approach for Nigeria.
We gather not just to talk about these changes, but to assess their implications and
Strain and
to
Bland
chart
partners
a
and a group
course.
of economists call this knowledge sharing, and it's their way to join in. Their perspective is assessing recent policy changes in Nigeria and their implications. It may be hard times, but the seemingly unfriendly situation also opens up opportunities.
The German companies or the European companies, they are restructuring their supply chains at the moment. So it's not just a one-way street what we offer in the services. We try to reach both sides and we try to bring both sides together.
The core of discussions comes during the panel. Founding partner Strain and Bland Partners, Amala Umeke, paints a picture from his observations and interactions and possible window for solution.
When I talk to businesses, right, and there are a couple of them in this room, one of the questions I ask is, what's your biggest challenges when it comes to regulatory issues? And they'll say, Amala, listen, it's not about the policies itself. But if I'm able to know that if I do A, B, C as a business, that for the next 4 years it will remain stable, I will just build my business around that policy. And when I thought about it, I think that if the necessary investment is made to agriculture, right, and not just investment in terms of laws, investment, but also tackling issues like security, insecurity, for instance, which is affecting our ability to produce agricultural outputs, that it will greatly assist in growing our economy, and the data is there.
While the agriculture sector may work, the FX shortage is still a challenge.
The crawling peg is a situation where you fix a currency within a band that no country leaves its currency entirely to market forces. And that's what we're seeing. I don't know how you talk about predictability, attracting investment. There is no foreigner or Nigerian. Let's not forget the foreigners. Even Nigerians that have the dollars. Nobody's going to put their money down to invest today because we don't know how much dollar will be tomorrow. But if today we say dollar is 1 to 2,000, okay, it's bad news. But we know it's 1 to 2,000 for the next 4 years, like you said. Then we can plan our businesses and make money. So is that predictability, the lack of predictability, that is hurting investment, both local and foreign?
Policymakers should actually engage consultants, right? Consultants who work in the relevant sectors so that they can do a proper plan, a holistic plan from the beginning to the end. Understand the implications of this policy. What is the rationale? Are you going to achieve this rationale at the end of the day?
Like I said,
Another brilliant conversation with doable policies waiting to be implemented for impact.